Ever feel like you're just a passenger in your own financial journey? It's time to grab the wheel and dominate the wild ride that is financial Jenga. Imagine this. In the grand arena of finance, each of us is a strategic player in a colossal game of Jenga. But these aren't just ordinary wooden blocks. These are the critical pillars of our financial system. Your hard-earned wealth, your retirement dreams, your everyday financial security. Each block isn't just a piece, it's a keystone, meticulously positioned to keep the entire structure steady and thriving. Here's the kicker. Remove just one of these crucial blocks, and you could trigger a catastrophic chain reaction. This isn't a child's game. It's a high-stakes challenge with unimaginable consequences. The stakes, your golden years, your financial independence, your peace of mind, all hanging by a delicate thread. One wrong move and everything you've built could come cascading down. But here's the ultimate power move. You don't have to be a passive player in this nerve-wracking game. You're not here to watch the tower tumble. You're here to ensure it stands tall and unshakable. This is where the golden strategy comes in, literally. Physical gold and silver are the solid, unmovable pieces that can protect, preserve, and privatize your wealth, turning the game in your favor. These precious metals provide the foundational strength needed to keep your financial tower stable amidst economic instability. In this guide, you will uncover the hidden truths about bank deposits and the financial Jenga blocks that could cause the whole tower to come crashing down. Understanding these risks is key to making informed decisions that safeguard your financial future. Think of each decision you make as a deliberate move to fortify the structure. Picture yourself placing each block with precision, knowing that your calculated moves are making your financial fortress unshakable. Stay informed by keeping your finger on the pulse of financial news and using precious metals like gold and silver as insulation against market volatility. In this high-stakes game, fortune favors the bold and the informed. Those who rise above the chaos and master the game of financial Jenga will not only secure their own future, but will create a legacy of stability and success. So are you ready to stop watching from the sidelines and start playing to win, master the game, and build your financial fortress? Because this isn't just about survival, it's about thriving and ensuring your financial legacy stands the test of time. Remember the 2008 financial crisis? The world collectively declared never again. Yet, the warning signs were brushed aside, and the root causes of the crisis remained unaddressed. From childhood, society ingrains the belief that banks are the guardians of financial security. Opening a checking or savings account is a rite of passage, with the implicit understanding that our wealth is safe within their walls. But what if this illusion of safety is shattered? Enter Regulation D, a federal rule that grants banks the authority to sweep funds from your account and engage in high-stakes gambling. Under the guise of profitability, banks can transfer your deposits into risky ventures, leaving your wealth vulnerable to their whims. The 2008 financial crisis was a mere warning shot. The root of the problem remained unaddressed, allowing banks to continue their reckless behavior. Bailouts masked the systemic flaws, incentivizing even riskier gambles on an unprecedented scale. Today, banks hold trillions in assets, dwarfed by their staggering derivative exposure. The global derivatives market now surpasses $1 quadrillion, overshadowing the entire global GDP. With laws like Regulation D and UCC in place, the stage is set for a catastrophic collapse. When the house of cards finally crumbles, the consequences will be exponential. Traditional safety nets, such as the Federal Reserve, will be powerless in the face of overwhelming exposure. The unsettling truth emerges: your deposits are not safe. They are collateral for the next financial meltdown. The financial system is a towering Jenga game, teetering on the edge of collapse. Each block represents a critical threat that can send the entire structure crashing down. 1. Accelerating global de-dollarization. The global financial landscape is shifting as countries and major economic players, including OPEC nations, reduce their reliance on the US dollar. The weaponization of the dollar on the world stage, exemplified by the freezing of $300 billion of Russia's assets, has led to widespread dissatisfaction. In response, central banks are buying gold at the fastest pace in 55 years, and foreign countries are also purchasing gold, diversifying out of the dollar. This includes reducing US debt holdings and conducting bilateral trades outside the dollar framework. Additionally, the BRICS nations are looking to create a new world currency to compete against the dollar. This shift leads to inflation in the United States, making everyday items more expensive and eroding purchasing power. 2. Runaway inflation. Inflation erodes the purchasing power of your savings and retirement accounts, making it harder to cover expenses. High inflation increases the cost of everyday items and can lead to economic instability, affecting everyone. 3. Staggering national debt. The national debt has ballooned close to $35 trillion, with $1 trillion being added every 100 days. This unsustainable debt level increases the likelihood of higher taxes and reduced government spending on essential services. Additionally, the government's need to finance this debt could lead to higher interest rates, further straining the economy and reducing the value of your investments. Now picture this chilling scenario. Foreign countries are dumping US debt, sending shockwaves through our financial system. This year, a staggering $8.9 trillion of debt must be reissued. As demand for this massive debt declines, the US government will be forced to offer higher interest rates to attract buyers. The result? Soaring borrowing costs for everyone, making loans and mortgages painfully expensive. This impending financial storm threatens to erode your wealth and destabilize your economic future. Understanding these risks is crucial to safeguarding your financial security. 4. Bonds in freefall. With hundreds of billions of dollars in troubled bonds sitting on bank balance sheets, the situation is alarming. Rising interest rates decrease the value of bonds, causing losses for banks and investors. This can lead to reduced lending and slower economic growth, affecting everyone. 5. Crumbling commercial real estate market. The commercial real estate market is in big trouble, with $929 billion in debt due this year and many empty buildings. This crisis could cause major problems for banks and the economy. When property values drop, the value of loans backed by these properties also falls. This weakens the financial health of banks, making them more vulnerable. As property values decline, many businesses may struggle to pay their real estate loans, leading to more loan defaults. This can cause big financial problems for banks that have loaned out a lot of money for commercial real estate. If many businesses default, banks may face serious financial strain and even liquidity issues, meaning they don't have enough cash to cover their needs. This situation can get so bad that some banks might face insolvency, meaning they can't meet their debts. To avoid going under, banks might use bail-ins, where depositors and creditors bear some of the losses by having part of their deposits turned into bank shares. This could scare depositors and lead to a run on the banks, worsening the crisis. The impact of a collapsing commercial real estate market goes beyond just defaults. If banks can't lend money, businesses can't grow, leading to higher unemployment and less consumer spending. This can create a downward spiral, making the financial system and the overall economy even weaker. 6. Soaring interest rates. Higher borrowing costs for consumers and businesses can lead to more defaults and financial strain on banks, slowing economic growth and increasing the risk of a banking crisis. 7. Mounting credit card and auto loan delinquencies. Consumers are increasingly struggling to make payments on their credit cards and auto loans, leading to a surge in delinquencies. This issue has reached critical levels, with credit card delinquencies hitting historical highs and the total debt exceeding $1 trillion. For consumers, falling behind on these payments can have severe consequences, including higher interest rates and fees, which make it even harder to pay off debts. 8. Imminent threat of a CBDC coupled with a digital ID. The financial landscape is on the brink of a transformative shift with the imminent introduction of central bank digital currency, CBDC, paired with a digital ID system. While this may sound like a technological advancement, the reality is far more concerning. This development threatens to obliterate financial privacy and significantly alter the way we manage and protect our wealth. With a CBDC, every transaction you make could be meticulously tracked by the government. Whether you're buying groceries, paying for a medical procedure, or investing in assets, your financial activities would be under constant surveillance. This unprecedented level of oversight means that your financial privacy could become a relic of the past. The pairing of a CBDC with a digital ID system gives the government unparalleled control over your finances. This centralized system would allow authorities to monitor, regulate, and potentially restrict your financial transactions. If deemed necessary, access to your own money could be limited or even denied based on criteria set by the authorities. This could extend to spending limits, transaction approvals, and even wealth redistribution directly from your account. Financial freedom is the cornerstone of personal independence and economic security. The advent of a CBDC threatens to erode this freedom by making it possible for the government to dictate how you manage your money. This could lead to financial censorship where the government blocks or restricts transactions they disapprove of, effectively controlling your spending habits. Moreover, the integration of a digital ID could pave the way for social credit systems, where your financial behavior is monitored and scored, impacting your access to services and opportunities. The potential for misuse of such a system is immense, posing a significant risk to your financial autonomy and privacy. 9. Potential oil price hikes. We are a fossil fuel energy-driven society. Everything we have in front of us is a byproduct and derivative of oil. Higher oil prices increase the cost of goods and services, leading to inflation and economic instability. 10. Underfunded Deposit Insurance Fund. The Deposit Insurance Fund is severely underfunded. There is $119 billion of insurance to cover $10.5 trillion worth of bank deposits. This could risk massive financial losses for depositors in a banking crisis, potentially leading to bail-ins. 11. Cyber attacks on financial systems. In today's digital age, cyber attacks on financial systems are a significant and growing threat. Cybercriminals and state-sponsored hackers use sophisticated methods like ransomware, phishing, and distributed denial of service (DDoS) attacks to breach financial institutions, steal funds, manipulate financial records, and disrupt services. These attacks can cause substantial financial losses, compromise personal data, and erode public trust in the financial system. The consequences are severe. Financial institutions may suffer millions in losses, which can translate to higher fees and reduced services for customers. Individuals can face devastating impacts, with stolen funds and compromised personal information leading to identity theft and fraud. Operational disruptions from attacks can prevent customers from accessing their accounts and conducting transactions, further eroding trust in the institution's ability to safeguard assets. 12. Stock market. The most precarious block in financial Jenga. The stock market, often heralded as the cornerstone of wealth building, is actually one of the most precarious blocks in the financial Jenga tower. Investors rely heavily on the stock market for growth and security, but the hidden risks and vulnerabilities lurking within can cause this critical piece to collapse, bringing your entire financial structure down with it. One of the most startling truths about stock ownership is the concept of beneficial ownership. When you buy stocks, you don't truly own them, the brokerage firm does. You are merely listed as the beneficiary owner, which means if the brokerage faces financial trouble, your stocks are at risk. This indirect control adds a terrifying layer of uncertainty, leaving your financial stability vulnerable to the solvency and security practices of a third party. Market volatility poses another significant threat. The stock market is incredibly sensitive to economic indicators, geopolitical events, and investor sentiment. A sudden downturn can decimate your portfolio's value overnight. Remember the 2008 financial crisis? Investors watched helplessly as their savings were wiped out in a matter of days. The COVID-19 pandemic brought similar chaos, with markets swinging wildly and eroding hard-earned wealth. High-frequency trading and algorithmic trading exacerbate these risks. These automated trading systems can trigger rapid price movements, leading to sudden market crashes. The flash crash of 2010, where the Dow Jones Industrial Average plunged nearly 1,000 points within minutes, is a chilling reminder of how quickly these systems can destabilize the market. Imagine waking up to find that your investments have evaporated overnight. The stocks you thought were a safe bet have plummeted in value, and your brokerage firm is struggling. Your financial future, which seemed secure, is now in jeopardy. Zombie corporations, a billion-dollar threat. Zombie corporations, heavily indebted companies barely covering interest payments, face imminent collapse as interest rates rise. Their downfall could trigger mass layoffs, reduced consumer spending, and economic instability. Let's review how physical gold and silver can protect you. Gold and silver have a long history of preserving wealth through wars, recessions, and financial crises, making them reliable safe havens during periods of uncertainty. As inflation rises, the value of paper money decreases, but gold and silver will increase in value, preserving your purchasing power for thousands of years. Gold and silver transactions offer unparalleled financial privacy, protecting your wealth from government surveillance and intrusive oversight. Pre-1933 U.S. gold and silver coins offer complete privacy, with no need for a 1099-B form or social security number upon purchase or sale. Moreover, they are exempt from confiscation under FDR's Executive Order 6102, Section 2B of 1933. Holding gold and silver will safeguard your wealth from losing value due to money printing and de-dollarization. Physical gold and silver are highly liquid and tangible assets, offering financial flexibility and control over your wealth. If you can't hold it, you don't own it. Physical gold and silver have no counterparty risk and no one else's liability, ensuring your financial security. Imagine the chaos: your savings decimated, retirement plans demolished, investments obliterated, your hard-earned money, everything you've worked for, wiped out in an instant. This isn't a distant nightmare. It's a stark reality in today's volatile economic landscape. Market crashes, economic downturns, and unforeseen financial crises can strike without warning. In this high-stakes game of financial Jenga, each move is critical. Every financial decision is like placing or removing a block in a giant Jenga tower. One wrong move and everything can come crashing down. But what if, instead of reinvesting in the same risky matrix, you pulled out those unstable blocks and used them to build a new tower of strength and stability? This is the transformative power of investing in physical gold and silver. Each time you extract a risky block, volatile stocks, unstable bonds, or inflation-prone cash, and replace it with gold or silver, you fortify a new, independent financial tower. Gold and silver are the bedrock of financial stability, the unmovable blocks that have withstood the test of time. Instead of putting your blocks back on top of the tower, you pull them out and create your own Jenga tower of physical gold and silver. With each gold and silver block, you build a fortress of stability and security outside the volatile matrix. These precious metals have been trusted for centuries, maintaining their value through wars, economic downturns, and market crashes. Don't let your financial future be dictated by the shaky blocks of the current economic system. Take control. Replace the risky pieces with the solid foundation of gold and silver. Build your own financial tower that stands tall and unshakable, no matter what challenges arise. This isn't just about surviving the financial game, it's about mastering it. Transform your financial landscape from a precarious tower into an impregnable fortress. Your financial destiny is in your hands. Make the strategic moves now with gold and silver and ensure your legacy stands the test of time. Gold and silver are not just commodities, they are timeless stores of value. Unlike digital currencies and paper assets, which can lose value overnight, gold and silver maintain their worth. They provide the solid, unmovable blocks that can fortify your financial foundation amidst instability. When the financial Jenga tower starts to sway, these tangible assets will keep you grounded, offering a reliable hedge against economic turmoil. You have the power to steer your financial destiny. Don't be a passive observer. Take the wheel, chart your course, and steer towards stability. By investing in physical gold and silver, you can remove yourself from the precarious financial Jenga tower and build your own fortress with the unshakable strength of these precious metals. Gold and silver are not just investments, they are your lifeline. In times of economic uncertainty, they act as your shield against market volatility and financial collapse. They are your safety net, ensuring that your wealth is protected regardless of the market's fluctuations. Navigating the current financial storm can feel like driving blindfolded. Don't let a stockbroker, financial advisor, or anyone else steer you off a financial cliff. Their advice is often self-serving and will not be enough to protect you from a collapsing market. Precious metals have withstood the test of time, maintaining value through wars, recessions, and financial crises. They offer stability in an otherwise unstable world. The financial Jenga tower is swaying, and the collapse is imminent. The difference between security and disaster is your action today. In this high-stakes game, fortune favors the bold and the informed. Those who rise above the chaos and master the game of financial Jenga will not only secure their own future, but will create a legacy of stability and success. Are you ready to stop watching from the sidelines and start playing to win? Be a lion, not a sheep. Since 2010, Gold Wealth Management has helped people protect, preserve, and privatize their wealth. Take the first step towards securing your financial future today. Call Gold Wealth Management today at 866-453-7587. No obligation, just valuable education. Request your free packet of information and discover how physical gold and silver can fortify your financial tower. Discuss a strategy that best fits you and your family's needs. Empower yourself with the knowledge to make strategic, informed decisions. Don't wait for the next financial crisis to strike. Act now and build a legacy of stability and security. Call 866-453-7587 today to take control, protect your wealth, and secure your financial future.